Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee futures. The pattern construction that led to the market moving higher started in between mid-March to early May. It was a dark blue highlighted bullish shift pitchfork. The market is right now moving down towards the middle time. Well, actually, sort of just up towards the middle time, I should say, which is above at 248. Below, we have the important congestion between 223.70 to 224.60, which has the recent 50% Fibonacci line, the May to July move at 223.70. We also have a bright red uptrend drawn last week, currently at 225.80. Now this uptrend I will explain shortly and its relevance. In between the bright red uptrend and the dark blue lower time, we have the mauve highlighted medium moving average, currently at 221.30. That is just above the dark blue lower time actually. I would like you to keep hold of these thoughts of these three supports in your mind, four supports if you really think about the band of congestion. I'd like to keep them in your mind as all these supportive factors, I believe, contributed to last week's weekly key reversal up. So price is now trying to punch up through the previously and oft mentioned overhead congestion between 241.05 to 243.40, containing the 2012 high at 241.05 and the November 2011 high at 243.40. Okay, so now we're moving to the bright red. We moved now to the bright red uptrend. I want to talk about that. Since the end of May and early June, this uptrend has also become part of another pattern, also highlighted it with a bright red trend line. And that one's currently at 270.5, one which I drew 2 weeks ago. Together, these two trend lines form a bright red highlighted expanding wedge pattern, currently 225.80 to 270.5. Last week, the market attempted a breakout on the downside, which was countered by that weekly key reversal up. So back to today's action, we might just be forming a possible day two in a 2-day separating lines pattern, usually seen as bullish. But it's actually pulled back since I've been speaking. It'd be very, very interesting to see where we close tonight after all this. London coffee. Prices made a peak in late April and low in early May that set up the opportunity for me to draw 8 weeks ago a bullish Andrews pitchfork for the late February to early May action. 2 weeks ago, because of market actions, I finessed this into a shallower bullish shift pitchfork for the same move, as highlighted in dark blue on my daily chart. We did see the top side upper time, currently at 47.73, tested in mid-July, but it held, and the market is right now between the overhead upper time and the middle time below, and that's currently at 412.12, the middle time below. And that's actually reinforced, however lightly it may be, it's reinforced by the rising short medium moving average, currently at 42.24. Further below, we have the rising medium moving average, currently 40.02, and the 50% Fibonacci line of the May to July move at 39.71. Whilst topside, should prices manage to establish themselves over the April 2024 high at 43.38, we have some limited recent congestion from about 4,500 area up to the high at 46.81. So for the moment, the shallow late February to early May bullish shift pitchfork is running the bullish angle of attack. Now, overshadowing all of this is last week's weekly key reversal up.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.